Hello and welcome into the KE Report. Shad and Corey here as your host, and today we're getting an update from Magna Mining. Magna Mining is traded on the TSX.V under the ticker NICU and on the OTCQB under the ticker MGMNF. And we're joined today with the CEO and Director of Magna Mining, Jason Jessup. Jason, always great to get you on the show, and it seems like every time we talk, there's multiple things going on with Magna Mining, so it'll be fun to dive into this here today. I want to kick it off just in a general sense, though, with McCreedy West, your producing copper mine, has a nice nickel and PGM kicker. This is in Sudbury. This is really the revenue workhorse for the company now to bootstrap your way through the pipeline of projects the company has that are development ready. And so a lot of people are wondering, how is the health of McCreedy West going from an operational standpoint? But also, you've put out some recent zingers from an exploration standpoint, just showing the high grade copper nature of this deposit. So give us a nice update on how things are going at McCreedy West.
Yeah, Shad, it's great to be back and tell you a little bit more about what we're doing, give you that update. So yeah, we're in about week 5 of owning the McCreedy West mine. And McCreedy West is, it's been a long life mine. It operated for, close to 25 plus years with Inco, and then has been operating when FNX restarted 2003 till now. So it's produced about 22 million tons of ore so far. So it really is one of those mines that just keeps delivering. And it's a ramp access mine, so it's been, traditionally a very low cost operation, quite simple, with people driving underground on a ramp, getting down to the workplaces, loading trucks with ore, driving that ore to surface, crushing, sampling it, and then we truck it off to Vale's Clarabelle Mill or Glencore's Strathcona Mill right here in Sudbury. So pretty simple operation. But I'll tell you, it's always a challenge with mining operations that have been undercapitalized. So, we do have a plan to really what we think is optimize the operation. It's been running at a fairly low scale, sort of around, call it 300,000 tons a year of ore being shipped off site. And that's a relatively small operation. And, historically, when FNX was running this mine, when I was at the mine, we would operate over 700,000 tons of ore shipped in 2008. So there's definitely capacity, we believe, in the resource and in the mine to do more than what it currently is doing. And that's what we're working on right now. But it takes some capital investment, and thankfully we have the treasury to do that, to put some additional development in front of us, get some inventory of development, get some inventory of drilling, get us access to more workplaces, more stopes per month, which is going to really pay dividends, I think, and really help us out and create, positive cash flow we're looking forward to in 2026.
So, Jason, just to understand better the optimization or I guess better production metrics, is that going to be driven by the drill bit, or is there some other news that we should be watching out for?
Well, it's going to be a number of factors, but definitely with the drill results that we have published last week, I think it kind of highlights the potential for higher grade mining grades in the future. And that hasn't been a focus, I don't think, in the last couple of years. It's been more about just taking bulk stopes, less focus on grade control, more just about tons. But my background and our experience, what really matters is grade control, is getting as many pounds of metal in every ton of ore that you're shipping to that mill. So, focusing on both better geology, targeting areas where you have massive sulfide, copper veins that you can develop into your stopes is what's going to make the big difference. So it's a combination. It's going to be higher grade, and it's also going to be just looking at where is there, efficiencies to be gained. For example, one of them is the mine was running on 3 shifts. So on a 3-shift schedule with no scheduled shifts, Saturday or Sunday night shift. So we're hiring some additional miners. We're going to be spreading some of the current workforce out over 4 shifts and then supplementing with a few additional miners. And that's going to give us, essentially an additional 8 working shifts per month, which makes a difference right there. So yeah, lots of efficiency is going to be gained, and all this is going to add up to becoming a much more productive and efficient mine.
Yeah, nice to see you adding a fourth shift there, and you'll have additional mining, which just means more ore being shipped over to the processing centers. Let's focus in on that grade component, though. Like you say, you can focus on the higher grade copper. The results that you put out to the market last week on the 31st of March, Jason, had some really high grade copper hits in it. You had 4.4% copper, along with some nickel and PGMs and gold over 18 meters, but there was 8.2% copper just over 7.3 meters. So when you think about that, and another hole had 8.7% copper, those are really high copper percentages. I think a lot of people are used to 1% copper or below. So when you start talking 4 to 8% copper, just the nature of the mineralogy here, that really can stack up value pretty quickly. So just talk about how you want to focus on finding more pay dirt in the copper component.
Yeah, well, we have, I would call it a secret weapon, but our VP of Mines Geology, Munir Hoxha, he was the chief geologist for FNX at the McCreedy West mine for about 8 years. And, he knows this geology, he knows this mine very, very well. That being said, there's still lots to be understood, and especially on the west side of the deposit. So the McCreedy West mine borders Glencore's Hardy mine, which is a mine that's been shut down for many few decades anyway. But there's a large sort of boundary area in just to the west of what was mined by Inco out to this boundary with Glencore. And we see a tremendous amount of potential out there. So Munir has been working really hard on, understanding the geological trends, where some of these veins are trending to the west, are untested. So we're working on, not only incorporating some of the drilling that you see right there, but also about getting out further to the west side of the deposit, where we continue to expand and drill outside of the historic mining into this area we think has potential. And I believe, based on my experience in these types of Sudbury deposits, that is where we're really going to develop a new complex, a brand new complex, hasn't been mined previously. And for 2026 and beyond, that'll be a big part of our mine plan. But we got to get out there, and luckily we have a great team that understands the geology now and is working hard on it. So that's going to be a big part of what we're going to do. And it really only takes, to be quite frank, one or two of these higher grade copper stopes per quarter to really kind of boost the revenues and, hopefully a lot more free cash flow. So, there's some development to do to get some of these worked into the mine plan, and our team's working really diligently on doing that.
What does that process look like then, Jason? If you're drilling these areas now and you're seeing the results that you want, obviously more drilling to continue to have that confidence around that area, but how quickly do you work it into a mine plan?
Yeah, and it's, I guess the short answer is as quickly as possible, but it does take time, right? And, at the same time, we're still mining and we can't sort of drop development that we have planned out over the next month or two to completely change focus. But we are, in many cases, sacrificing sort of short-term tons, short-term pounds of metal to set us up for a much stronger future. So we may be looking at doing, taking some of our resources from production and reallocating those to additional development headings to get at some of these areas. So long and short of it is we're going to get at these places as quickly as we can. At this time, I'd love to say we're going to be, mining some of these areas in May, but it may take us a few months longer than that. But we really are setting ourselves up so we have a good plan that's solid. And then towards Q4 this year, we'll be in a position to have steady, consistent, optimized production at McCreedy West. And that's really what it's all about. The mine has operated previously more sort of hand to mouth with development without having a lot of development out in front of them. And that's not how we want to operate. So we're going to take some of our resources from production in the short term, allocate them to development, and get out to some of these areas as quickly as we can. But it'll still take probably a quarter or two to kind of get set up the way we want to be for that production.
Yeah, and I think for people listening in, to the point you made at the onset, you've only had this for 5 weeks, so some of these plans take a little time to implement. But I like the idea that you're increasing the number of shifts, that you're looking for these high-grade copper areas, that you're doing exploration work, doing development work to hit some of those high-grade areas that haven't been mined yet. And so you can see things really coming together for the McCreedy West mine. I do want to widen the scope a little bit more to how you're not a one-trick pony here, Jason. Magna Mining has a number of development assets, a number of prior producing mines, in addition to a plethora of exploration projects. Let's just talk about how McCreedy West will help fund the development of the pipeline of projects you have, with Levack being the next mine up to bat. At Levack Mine, you also put out a little bit of exploration news in that same press release from last week, and it has 12% copper, and even parts of it including up to 25% copper. So really high grade copper hits here. Again, this is a past producing mine that you guys operated when you were FNX. It's probably the next one in the batting order. Talk to us about how McCreedy West and all of the work you're doing bleeds into the development of this next mine in the batting order.
Yeah, like I'm very, very excited about Levack Mine. It is a mine I know well. I was managing the operations there back during my FNX days from 2009, 2011, and we mined high grade copper. We mined 10% copper with 10 grams of platinum, palladium, gold, and probably 1 to 1.5% nickel. And we did that quarter after quarter. So I know what it can do. Our plan is to build a restart plan this year to restart the Levack mine, and the mine's in great shape. It's a on care and maintenance, operated as recently as 2019, and we believe it can have a low capital restart plan based on all the infrastructure and the ability that we can get underground and start drilling underground, hopefully in the next month or so. And currently we have 3 drills on surface, 2 turning, the third one will be starting very shortly. So it's an exciting mine, and our plan would be to sort of be able to talk about this restart plan, both expected capital costs and sort of how the production ramp up could look sometime later this year. But the team is working quite rapidly. Actually, after this interview, I'm heading out to Levack Mine to just discuss that with the team out there. So all things go well, that would be a 2026 restart. And potentially, a large portion of that could be funded from cash flows from McCreedy West in 2026. So that's kind of how it all fits together. And really that is the same, I guess, business model strategy that FNX executed, with McCreedy West starting and producing cash flow to, restart Levack Mine and Podolsky Mine. And, we're in a position that we believe we can do something similar.
What is the asset resource wise at this Levack mine that it sounds like you're really trying to build off of?
Yeah, so right now it only has a historic resource. And the historic resource, I won't get into the details of it, but it was, a KGHM resource. We will be updating that, including some of the drilling that we're doing right now. Hopefully, later this year. I would like to see something, early in Q3. But yeah, it's got a decent sized historic resource, that includes both contact nickel and the grades in the historic resource. And again, these are not NI 43-101 compliant, are approximately 5 million tons at 2% nickel, 1% copper. And then in the footwall zone, there's, approximately 700,000 tons of historic resource at about 4% copper and about 5 grams PGMs plus some nickel in the Morrison deposit footwall zone. But what really gets us excited is this potential closer to surface in the footwall, where we have announced that drill results with up to 24.9% copper, like a massive chalcopyrite vein, 1.6 meter width. And in and around that, both to the east and west, as well as down dip of this zone, we see great potential. So that's where we're focusing our drilling right now. And we think that can be incorporated potentially into an early mine restart. One of the things we're looking at is a new ramp from surface, a portal that could potentially access some of these high-grade footwall areas very, very, soon after collaring that portal. So that's the exciting part for me. And then, the down dip and the potential. Again, I'm not going to speculate on the tons and grades, but neighboring properties to ours have been mining this same footwall breccia horizon since the late 1990s continuously. So you can imagine mining for 30 years in a zone in the footwall that is basically right beside the Levack mine, in between the Morrison deposit and the Coleman mine shaft. So lots of potential, we think, for a long life footwall deposit to be discovered on our property, separate from what the known mineralization is. So we're quite excited.
Well, Jason, that is exciting considering all the drilling you have there. If you have 3 rigs, you're putting out really bonanza grade copper results here on the percentages you're finding. And if you could drive a portal down into that high grade area and then have, 2 different access points, you could see how it would come together into a pretty zesty mine that should run for a long time. And maybe that gets into the fold next year as far as another producing asset. I also want to focus on the news you put out on March 5th, where you talked about the closing of $33.5 million private placement. So that puts the company in a strong financial position. But one of the ideas that you also have is that in the right kind of a market, if we saw copper prices bounce back up, if at a good cost of capital, you could even look at potentially bringing in a strategic partner down the road to help with all the other mines you have still waiting in the wings. Things like Crane Hill, Podolsky. There's so many other development projects the company has. So maybe talk about the financial strength of the company as it sits today, but the optionality that you have for some of these other projects, maybe 2 years out, 3 years out, maybe bringing them a little bit sooner into the mine plan.
Yeah, Shad, I think that is, it's a great attribute of our company. And I'd like to I'm thankful that we were able to go out and our board supported us raising money and closing that financing at $33.5 million financing in early March, because great timing set us up to be cashed up to execute our plan. Now, our base case plan, as you said, is to use some of this capital for working capital and investing into ramping up at McCreedy West, which then could allow us to help fund the restart of Levack Mine in 2026 from cash flow potentially, and then look at Crane Hill after McCreedy West and Levack are both producing some cash flow. Now that's kind of our base case. And as you said, if the cost of capital is right in the future, or if there is support from, even perhaps government organizations that are looking to boost critical mineral production in Canada, that could be something we'd consider. And then that potentially could help us really expedite the ramp up of the mines, as well as starting construction of the Crane Hill mine as well, simultaneous with Levack. So is opportunity for us to speed things up a lot. And, that'll really be dependent on cost of capital. But our base case is to, use the cash we have to execute at McCreedy West and then build Levack Mine. I think once those 2 mines are up and running, that gives us all the flexibility to expand and grow our production at our other properties that are permitted in Sudbury here, over those next couple of years.
All right, so that's kind of the bigger vision of the company. I think we'll wrap it up there for today, Jason, but a lot of news on tap from the exploration and development side to the production side at McCreedy West and at Levack right now, and a lot of news on tap really at some of the other projects as the year unfolds. So for those listening in, if you want to follow along with all the news from Magna Mining, definitely click on the link below in the show notes. Takes you over to the company website, straight to their news section where you can sign up for updates, have them hit your email inbox, or just follow along with the news. I think it's going to be a news-rich year for the company. And Jason, always appreciate you coming on the KE Report and give us an update on Magna Mining. Looking forward to our next conversation.
Well, thanks a lot, Chad. Really appreciate giving you the update.